Hello traders, and welcome to our highly important educational video about fair value gaps or inefficiencies, the secret weapon for successful day trading. In this video we learn what is fair value gap, identify high probable fair value gaps, key factor and tips, inversion fair value gap, how to refine them, and finally how to trade using fair value gaps. Before we start, just remember, everything we discuss can be used in any market, such as the stock market, Forex, and also cryptocurrencies, because price action is the same across all different markets. So buckle up, grab a pen and paper, and let's dive in. We start by understanding what exactly a fair value gap is. Picture three candlesticks on a chart. The area of the middle candle's body that remains uncovered by its neighboring candle's bodies, or wicks, is what we call a fair value gap, or an inefficiency. More specifically, we call the bullish fair value gap buy-side imbalance, sell-side inefficiency, or BC, and the bearish one, sell-side imbalance buy-side inefficiency, or CB. When fair value gap forms in a price swing, it seems like market shows its hands to us. It's kind of price action sign that shows big money and large funds participating in the market. So when price pullbacks to fair value gap area, we find that as an opportunity to execute a trade in same direction with big money orders. Before jumping into trading fair value gaps, let's dive into the key conditions that make a fair value gap worth our attention. Liquidity is the lifeblood of price movements. Before I-FVG forms, we want to see some kind of liquidity graph. This guarantees that we're aligned with the smart money that's already in the game. We also look for a shift in market direction. When the market crosses its last swing high in a bullish scenario or the last swing low in a bearish scenario, we call it a change of character. This signals a change in market momentum, and that's when we start paying close attention. Now, let's discuss some important points to consider when dealing with fair value gaps and incorporating them into our trading strategies. First is that we're only interested in gaps that reside in specific areas. In bullish scenarios, we focus on gaps below 50% or in the discount zone of a swing. Conversely, in bearish scenarios, we target gaps above 50% or in the premium zone. To determine these levels, we use Fibonacci retracements on the last price leg. Next is that when price approaches a fair value gap, we want to see the market acknowledging its significance. This means we expect no candle body closures beyond the midpoint of the gap's range. In best case, price should touch the gap and then close outside the gap area. Remember, we're focused on candle bodies here, not wicks. Wicks can go even beyond the fair value gap's range. The size of the gap also matters. Stronger candles indicate more significant market moves, making our setup more probable. Also, you should always keep an eye out for major news events. These can cause substantial price movements and result in huge fair value gaps. However, we consider these gaps as fundamental inefficiencies, and we avoid trading them. Proper stop-loss placement is crucial for risk management. For large fair value gap candles, we place our stop-loss below the candle. And for smaller candles, we set the stop-loss on the candle preceding the fair value gap. Fair value gaps also can turn into inversion fair value gaps. Occasionally, the market decides to disregard a fair value gap and continues its movement. When this happens, the fair value gap transforms into an inversion fair value gap. Inversion FVG behaves just like regular FVG, but with a twist. A bearish FVG can become a bullish inversion fair value gap, acting as a support level that pushes the market higher. On the flip side, a bullish FVG can morph into a bearish inversion fair value gap, acting as resistance when the market pullbacks. Another interesting phenomenon is the occurrence of an inversion fair value gap before our regular FVG. In such cases, price may respect this inversion gap and drive the market higher even before reaching our initial fair value gap. We refer to these unfilled gaps as breakaway gaps. Having breakaway gaps in a swing shows the strength of the market. Market usually leaves a fair value gap unfilled when it is in a hurry to reach another important point of interest or a liquidity level. Now, let's delve into the art of refining fair value gaps to enhance our trading precision and reduce risk. As traders, we always analyze the market from a higher time frame to a lower time frame. This allows us to identify potential trading opportunities and manage risk effectively. In this example, we're using a 4-hour time frame as our higher time frame. The first step is to locate a fair value gap on the 4-hour time frame. We'll look for a gap in the premium area of the last major price leg, above the 50% level. Once we identified this gap, we'll mark it and wait for a pullback to the fair value gap area. If we were to execute a trade based solely on the 4-hour time frame fair value gap, we might face significant risk due to the large price range involved. To mitigate this risk, we'll employ the technique of refining the fair value gap. So when market touches our fair value gap range, we switch to a lower time frame, such as the 15-minute chart, which we use for day trading. By doing this, we're essentially zooming in on the market and gaining a more detailed view of price action. After some experience, you will find what lower time frame works best for you. But just to start, if your higher time frame is 4-hour, your lower time frame can be 15-minute. If it is 1 hour, lower time frame can be 5 minutes, and if your higher time frame is 15 minutes, your lower time frame can be 1 minute. On the lower time frame, we'll follow the same principles we discussed earlier. After market grabs some kind of liquidity, we will wait for a change of character in market structure, indicating a shift in momentum. Once this change occurs, we will look for a new fair value gap on our lower time frame. We will mark this new fair value gap and wait for a pullback. This time, however, our risk is significantly reduced because we're working with a smaller price range on the lower time frame. By refining fair value gaps, we're able to pinpoint more precise entry points, reduce risk, and increase our chances of successful trades. Remember, practice is key, so experiment with different time frames and strategies until you find what works best for your trading style. Here you can compare the risk of taking the same position on both 4-hour and 15-minute time frame. Last topic is trading using fair value gaps. We've covered almost everything about fair value gaps and how to utilize them. Now, let's delve into an example of an FVG setup, incorporating our previous discussions. We begin with the 4-hour time frame as our higher time frame. Identifying the last major swing and our trading range, we observe the market grab sell-side liquidity below equal lows and then shift it in market structure aggressively, forming a significant FVG. Since the FVG range is extensive and we need to target a gap in the discount area, we change the time frame to a lower time frame like 1 hour for clarity. Here we have an obvious fair value gap below 50% level. Marking it, we move to our lower time frame and wait for a pullback. On 15-minute time frame, market touches our fair value gap, so we wait for a bullish change of character. Now we should find a fair value gap to execute the trade. Identifying a small FVG aligning with the breaker area, we initiate a position as the market touches the fair value gap. You can find everything about breakers and how to use them in the order block video in our channel. We place stop loss and targets on various liquidity levels or swings. Here you can see how easy and fast market reaches our target. By refining the fair value gap, we achieved a significantly improved risk-to-reward ratio in this setup. Now you should go on your charts, find similar examples and practice before taking any position with real live money. Please consider like and subscribe. You can also ask any question in the comments. Thanks for watching.